Oh man, you got a real hard sell now. Think about it. Oh, oh man, you didn't see that one. You didn't see that one coming, did you? Oh man, everybody with their planned 2025 mentorships, and they all been getting their source material out of my videos on my YouTube channel. And they want to talk about order blocks and fair value gaps. And I'm gonna have a mentorship, baby. Mentorships opening up in 2025. Yep, and so is mine with real money. No props, no prop firm demo stuff. Nope. No market replay. No delayed data in my live stream, pretending that it's real and live, with broker statements that never matched the executions on video streams that were now deleted. Hello. Hello. Still not a cuss word said, isn't it? It's nice, isn't it? I want to introduce you to the truth as well. Okay. Part of my online persona is you think I'm bipolar, but I'm not bipolar. I have done so many things over the years and pantomimed so many things. I absolutely know exactly what I'm doing every single time I say it and do it. It's sometimes it's done way beyond the level of delivery I was expecting it to be. But you all honestly believe I'm unhinged. I'm not. I know exactly what I'm doing. I'm capturing your attention by any means necessary, and then I'm challenging you. And for the people that don't really want to learn from me, they want to come here and take shots against me, I'm trolling them and enjoying it the entire time. I show them a faux witness to some kind of contrived weakness that is not there. Think about it. I give you enough to hang yourself, whether you love me or hate me. And the true test is, are you here because you want to make yourself better, or are you here to worship somebody? I'm not your hero. I'm never someone to be worshipped or looked up to. Never. You should never aspire to be like me. Ever. I am a sinner. I am somebody that makes mistakes. I am a human being. I failed a lot. You should never say, I want to be like you, ICT, when my intentions are for you to be better than me. I purposely have pantomimed someone that doesn't exist online with a supposed mental illness. And I waited for people to take shots at me, and their low-class attempts to do so shined a light exactly on who they are. And they were selling services. They're acting like a financial advisor, and they carry themselves like that. That's shocking. And they took the bait perfectly. One of them's real quiet right now. Another is a blowhard. And you'll see them tumble. They're having a lot of fun right now, as they should. But the people that I create as profitable traders, they don't owe me anything. They don't owe me anything. They don't owe me a high five. They don't owe me you helped me get here, ICT. It wouldn't be possible without you. Never, ever, ever say those things. Never say those things. Because I didn't put you in those trades. I didn't tell you to take that risk. I didn't comfort you throughout the process of you entering that trade, holding the risk, and then taking the profit when you did. I had no part in that. And while I can understand you're trying to give it the respect and the I guess the appreciation for the influence I had over you, your success is your success. You worked for it, you believed in it before it came to fruition, and you earned it all by yourself. I had no part in that. Sure, I have content up on YouTube. Sure, I have lectures like this where I'm talking about encouraging you and giving you a mindset overhaul. But all these things pale in terms of what matters most, because I can talk and talk and talk and teach forever until someone takes that understanding and makes it their own and applies it to themselves and they correct their shortcomings. Until they do the work, the proper backtesting, the logging, the refinement of who they are as a trader, defining what their model is going to be, trading on what time of day, what instrument, and not being influenced or impulsive about chasing something because somebody else, even me, doing something differently. Oh, I better do that. I better keep up with it. I better change directions because ICT and the crew are doing something now new. I have a lot of students that never left or migrated from Forex and they're making money still. They are successful students because they didn't change simply because I was more inclined to go back to futures trading. They stayed right where they're planted and they're still profitable. They graduated. That means they don't ever need to worry about listening to an ICT space. They don't need to go over to a YouTube channel and see what's he up to now. They don't need to see what my next tweet's going to be. Because the majority of what's going to come across X is me just having fun. I've been very candid about that. 90% of what I tweet about, they even call them tweets anymore if it's X. Like, what do you call that? Yeah, I'm going to stick with tweet because it makes sense to me. But whatever I post on X is me being fun. Like, it's about me cutting up with y'all. And not everything I say is meant to be serious. And I like to be sometimes dry in my humor and sarcastic. It doesn't usually play well for the folks in another language. They think everything is cut and dry and it's binary. And I don't consider myself a binary. In this case, I guess it would be non-binary, wouldn't I? I'm going to get some flack for that one, right? But the idea of following somebody and giving all of your credit to them because you succeeded, that's nonsense. That's absolute nonsense. Any success that you get comes by, first, the grace of God, whether you believe in Him or not, and your own work. Your work ethic, your tenacity, all those things are going to be hallmarks to your success. And you owe no one, me included at the top of the list, you owe none of us any credit for it. I don't give signals, so that means I didn't give you that trade. I don't tell you where to place your stop loss in every individual execution, so that means you did it right by yourself. So when you show me examples that you did really well, I understand what you're doing. Believe me, I know exactly what you're doing, and I appreciate it. But stop diluting your success by saying, it's all because of you, ICT. It's all thanks to you, ICT. Stop. Stop doing those types of things. Just say, hey, this is what I did. You know what? Awesome. They're the ones I like to thumbs up or give a heart to because you're owning it. And when you try to do something and you did all the things that you thought were right and you failed at it and you make that post to me and you're not saying, I used your stuff and it failed. No, I tried this. It didn't work out for me, but I'm not discouraged. You're not giving me credit. You're not tearing down the concepts and you're owning it. I will always, if I read that comment, I will always like that. Because what am I seeing? I'm seeing someone that's being responsible. They're not trying to glad hand with me just to get me a reply or a heart, like that's a signature or an autograph. Like some of you, honestly, I can see it when you post to me. It's literally like you just want to have some kind of engagement with me. And I'm just a man. Like I'm just a man. There's nothing special about me. So stop trying to have that relationship with me. Think about what you're doing. Focus on improving yourself. If you want to grow to be someone like in my position where I have a lot of influence and a lot of people listen to what I say and whatever I'm presenting, they want to watch it. If your aspirations are to become like that and then be looked up to, it's going to affect you negatively. You might not think it's going to be like that, but it will be. So when we progress through 2025 next year, and if you do follow what I'm doing and it makes you money, and you're out there and you're talking in your own little circles and you're saying what you're hearing me say, And that analysis is being echoed by you and people that may not be aware of me. Like in Brazil, there's a lot of people right now cloning me. They're not saying they're ICT. They're not pretending to be a conduit where they're just simply translating it from me in my poor English into their language in Brazil. They're omitting any reference to me at all. And they're saying they discovered all this themselves, that they're somehow smart money, and they're not. They're just simply parroting what I've said. And there's a few channels on YouTube that's about to lose their entire show because they've done that. And I've warned you, and I know you're listening to me, so just expect it. It's coming. But I know that that's going to happen. I don't care. Okay, I don't care that you're going to take what I'm going to do next year and you're going to have your own little mentorships and you're going to follow what I'm saying and you're going to look smart in front of everybody else. Okay, wonderful. But it's not going to be a whole year of it. It's not going to be a whole year. I'm not obligated to do this for the entire year, but I will do it for the first half. And then I'm going to be doing some traveling the second half. Like I have some places I want to see and experience, and I have some things I want to take care of in my other businesses. So, and they're not trade related. So, first half of next year, that's my goal. The 2025 mentorship is about 5 months or so of me sitting down, going over all the asset classes, what I intend to do, what I want to put real money behind. It's not meant to entice you to take real trades with it. In fact, I'm warning you not to do it. Okay? I want you to go in with a skeptical mind. I want you to go in there expecting everything I'm going to do is going to fail. That way, you won't put money behind it. And if it does pan out, just know that you've had a unique experience to see what it looks like beforehand. How much analysis goes into the decisions? What am I focusing on? What tools am I referring to? All that stuff. And you'll see that it's not complicated. I'm going to stick with very simplistic ways of doing it. It's not going to be 15 different models. I'm not even creating a new model. There's no new model necessary. But in January, I will teach you how to formulate and fashion your own model based on everything I put on my YouTube channel. My final point, and I'm going to close this stream out. If you were part of my private mentorship, when I was doing daily commentary and I would talk about the market for that individual day, many times I would say that you're learning the building blocks to formulate a trading model for yourself. In the beginning, it's normal for you to not know the direction of where you're going. It's normal for you to not know what PD array to focus on. And I was promoting the idea that you could organically arrive at which PD array that you're going to focus on as your multiplier, the thing that gets you into a trade, whether it be an order block, a fair value gap, a breaker, it's something to that effect. But you don't need every single one of my PD arrays to be profitable. And I'm going to teach in January in those 20 contracts, in those 20 individual lectures that will be pre-recorded, so they're not live streamed. That way it'll allow me to make these videos real short and concise. I know that sounds impossible, but I purposely make these things sometimes long, not because I love the way I sound or my own voice, but because I want people to physically put the effort into listening to good sound logic, in addition to me tucking in the little nuggets and the gems inside those lectures. So it's all premeditated, okay? And kind of like when I tell you it's going to be a long one or a short one, it's a long one. Or if I say, all right, I'm done for the day, we say it's a running gag I do on Twitter. It's something I intend to do because I knew people are going to laugh about it. And the new people are going to be like, what is up with this guy? He just said he was done. He keeps coming back. I love that. It makes me laugh. It makes me smile. And I know if I'm smiling about it, I know there's a lot of you that get the joke. You know you've been around me long enough. And it's funny to see people literally lose their minds over. Like, this guy's out of his mind. Like, he's impulsive. I'm not impulsive. But I play a character online that makes you think that I am. It's just that entertainer aspect of me. I love doing that. It gives me a great deal of pleasure and joy. It makes me literally laugh out loud. And my wife looks at me, what are you doing now? What do you do, Michael? What did you do? What did you just do? It's funny. And sometimes she doesn't get the joke, but it's okay. She doesn't need to get the joke. She just likes that it's not drama where it's hurting anybody's feelings. And it's something that just makes me happy. It makes me smile, and it makes other people that are part of our community smile. And it's hurting no one's feelings. And I mean, to me, it's fun. So the point is, you're going to see how you can pick certain aspects of what I taught instead of trying to have a kitchen sink approach, meaning everything that you have to make or prepare food is in the sink dirty. Okay. When you're trading and you're building a model, you only need a couple components, but you have to have a basic understanding. When should you? When shouldn't you? Those are very generic things. Knowing when the market's likely to be conducive for a easy trade, which I define as a high resistance liquidity run condition, that's a more difficult trading environment. Not impossible to trade, but a new trader is going to be very hard pressed to find the very first entry being met with no drawdown. In fact, they're probably going to get stopped out a lot if they keep trying, and if they don't know how to control themselves, they'll go on tilt and blow their account. Or if they use these funded account companies, they'll go into maximum drawdown and then they'll be forced to stop trading for that day. If I understand it correctly, I think that's how it works. I don't know if it means that you stop trading for that day still, or if it ends you. I don't know. I don't know the full dynamics, but the folks that are listening that do trade that kind of stuff, you understand what I mean. The point is, in high resistance liquidity run conditions, I'm not trying to trade those environments next year in front of you. I'm not trying to do that. I'm focusing on times where the market's more liquid and it's loose. That means it's going to be low resistance liquidity run conditions. That means when I'm putting money in these moves, I anticipate them to be free, fast, and loose, running right to where I want it to go, quickly overcoming the spread and allowing me to reduce the risk. That's what I'm looking for. My mentorship has always been predicated on that being the final conclusion to you as a defining process, condition to trade in, what environment, because not every single day is a trading environment for a new trader. It's not. And these campus crusaders that want to, parrot me in their mentorships and say they don't, they're out there trying to fill your head up with nonsense. They are not properly educated. They have no idea what they're talking about, and they're not equipped, and they are not even in a position of authority to be talking like an educator. And they're filling your head up with nonsense. Not every single day is a low risk trade for a new trader. And as an educator, I'm always going to start with that as my audience. And I am aware that most of you that have been with me for a long period of time, you have heard these before. You've heard these talking points before. It sounds redundant, but you're not the only person that's listening to me. And it takes a great deal of filtering on your part. And I understand it's not fun to do that because you want me to talk about something new all the time, some kind of new magic trick, some kind of new twist on something that will give you precision that this transcends all the, other models that I've ever taught before. When you don't need all that stuff. All you need is a simple know when to trade, when not to. And that's derived by experience and understanding what price action looks like between the relationships between high resistance liquidity run, where the market overlaps the previous candles a lot of retracements back and forth. It still might go to where you think it's going to go, but it's not going to be a straight shot. That's not the conditions that I'm teaching students to trade in. But I have to teach them reading price action in those environments because just like following the tracks in the snow when you're going hunting, you will recognize because you've seen it before. You've walked that path before. You know that there's deer walking in this pathway. So if you put up a hide and you wait, give it enough time, when? Always in the morning and late in the evening. That's if you were here with me at my home, it's amazing how they're cyclical. All these deer show up in the span of 3 hours. There's a 3 hour window where we can set a clock to, this is like a kill zone in time. Right before dawn and 2 hours after dawn, I know I got 15 to 30 deer in my backyard at the edge of the forest. In the evening time, the same thing. I watch them come down the hill. It's always the same thing. Always the same thing. 1 hour before sunset and 2 hours after sunset. They're just there every single day. In fact, I had to tell people to get off my property about 4 days ago. They're out there stomping around in the forest. I was like, had to walk out. I said, what are you doing? What are you doing on my property? Oh, we shot a deer and we asked your neighbor if we can come. I said, my neighbor doesn't own this property. I own this property. Get off of it now. But you're trying to find your way off my property, Jack. Okay? Get off my property and don't let me see you come back here again. I don't care if you shot a deer. You're on my property. Don't come back here. I had to put that in there because it's live, and I would edit that part out if it would have been a recorded session. But the point is, there's times where you know that these things are going to repeat, just like the markets. There's kill zones. There are certain times where you're going to operate as a trader and say, okay, these are my working operating hours. And you're going to stick to that. You don't care what happens outside of that. Hunters don't care what the deer are doing when they're not expected to be walking around in these periods of time, early morning or in the evening. They just know that they're setting up shop right there. It's called a blind. Okay, it may be a tree stand or on the ground or a little bit above the ground, but they're simply just sitting in one position. They're not trouncing around in the forest. They're sitting still. That's what you as a trader are doing. You're sitting there waiting for your opportunity to shoot. Now, I personally, I guess I would if I had to eat that way, but as long as they have grocery stores, I'm not going to go out and kill an animal. I'm not going to do it. Okay, I understand why people do it, but if you don't eat it, you're just cruel. If you're just shooting it to take its head off and put it on the mount of a wall, you're a jerk, in my opinion. But if you're consuming that animal respectively and taking it out quickly, I guess I have no problem with that. But I personally have never killed an animal like that. But in trading, you would think I'm like Elmer Fudd out there trying to shoot everything, or Yosemite Sam, right? That's kind of like what I was when I first started as a trader at 20 years old. I was like Yosemite Sam. Anything you said would cause me to get into a trade going long. I'm out there shooting, and I'm carrying on like a crazy guy because I wanted to be in everything because I thought I was going to miss every possible trade. And that's not realistic, but it feels realistic and feels like it's a proper mindset as a new trader because you feel like the next trade's the only trade. The next trade's the last trade you're ever going to have that could make money. It's a weird paradigm shift that needs to be taken where you first start thinking about trading and then gravitating away from, I need to be doing something every day. The first permission you should give yourself as a trader in development is, I don't need to trade today. Now contrast that with every other influencer out there. They're going to tell you that you have to, or you're not a trader. A real trader A real trader knows when to sit still. A real trader is going to have a higher strike rate and a lower frequency of trade, and that's just the truth. But you're never going to hear these people say that because they're incentivized. Why? They got to get you trading. They got to get you trading in these ridiculous thresholds of skill set that you don't have, where the money that you make in demo account has a trailing stop loss on your P&L. You ever stop and think about it? Because that's exactly what they're doing to you. And eventually it's going to come down and stop you out. You're going to hit maximum loss or maximum whatever it is, and then you have to reset the account. And they make money that way. And you are pushing your progress profitably further down the road. But the influencer that you're worshiping, they're making money off of that. So they're incentivized by you trading more than you should, taking unheard of risks, trading with leverage, hoping you'll emulate them. So you blow your account and they can go out and do the things that they're doing that they would never be able to do because they can't make money trading. But they look like they are as an influencer. They look great, but they're really not as good as they're pretending to be. And you're feeding these people. You're physically giving them their lifestyle and they're rubbing it in your face the whole time. You're in an abusive relationship and you don't even realize it. So what I try to do is I strip away all that stuff. Okay, I got more money than all of them. And I could literally put them on welfare any given day of the week. I can go out there and show them they have nothing, they can't do anything. But that's not my motivation. My motivation is take the average Joe, the person off the street that says, hey, I just wish somebody would just simply talk to me plainly and not try to get up in my pockets about anything and show me what works and help me, put me in the right direction and give me the skills that I have to practice and I will do it on my own steam. That's who I want to teach. And my millionaire students are the ones that have done that very thing. And a lot of them simply have nothing to do with social media. But they understand the components of making a model is not complicated. When they took notes from me teaching in the private mentorship, when I would say, You're going to learn a lot of things. I'm going to teach a lot of concepts. But the worst thing you can do is try to apply all of them. But every mentor out there that has my name, my logo, me as their mentor, trained and charter member by ICT, let me explain something to you, okay? And I mean this entirely. If somebody came forward and they're out there marketing themselves as an educator and they're claiming that they're a charter member of me, that's the worst person to learn from because they have no class. When they signed on to be a student of mine, they signed on understanding that they were not going to teach my concepts. But they're no different than a panhandler out there on the road that lives in a nice home, that drives a nice car, but they're wearing rags asking you to give them money, and they're making $1,500 to $2,500 a day tax-free. They didn't earn that money. They didn't do anything. They're just doing something to pull on your heartstrings. They're defrauding you. And by having my name saying I'm a ICT charter member, I'm a this and I'm a that, I personally trained by ICT, like I'm Bruce Lee or something. Stop that. Stop paying these people. Stop. And I know I'm making you angry if you're the persons that are doing it. I don't care. You weren't supposed to be doing this anyway. And anybody that pays you is an idiot. Because it's for free on my own YouTube channel. And I'm continuously introducing further education. And I'm not asking for anything. I don't care if you use it. I don't care if you love me. I don't care if you hate me. I don't care. None of that stuff has ever stopped me. But the ones that have done very, very well, when I told them not to apply everything, they took the notes and they took it to heart and they applied it. Well, how do you do that? What am I supposed to do with all that content on ICT? Like, I would eventually, given enough time, I'll watch everything you got up there, ICT. If it's something that you say I should do, I will spend time. If it takes me one video a week, I'll eventually get through it. Maybe, maybe not. But I don't feel like I have to do it if you point me in the right direction. So what direction would that be? Understanding there's conditions in the marketplace that are conducive for very easy trading, and there's other conditions that are not favorable for that. And most of my teachings are helping you determine what that is. Because no other book, educator, or course, or anything ever taught me that. I lost lots of money not knowing that. And because nobody else has a way of determining how to do that, I had to be the spokesperson for it. So I filled in all of the gaps that anybody that I looked at as a mentor when I was coming up, all their frailties, all their admitted weaknesses are all my superpowers. I took those opportunities and said, you know what? I'm going to be the mortar in between the tiles of this fortress of solitude. I'm going to fill those gaps in. I'm going to be the one. I'm going to use the experience that I took, and I paid for that experience with losing trades and blown accounts. I paid for that. So whatever I did at those instances, if I just simply reverse that logic, then there should be something that repeats. And there was. I was always buying when the market started going up instead of buying when it dropped down. I was always trading in a market that was high resistance, expecting it to finally break out. That's why I'm not a breakout trader. So I'm looking for conditions that markets leave open fair value gaps. I want to see imbalances stay imbalanced. That is a low resistance liquidity run condition market. That's exactly what every other educator out there does not know. And if they knew it, they probably wouldn't even tell you because it's an advantage. It's a superpower. It's an absolute game changer. It changes everything. And for the folks that have been with me for a while, that's never listened to me, even though I talk about it in my mentorship videos, you had a fast track of it with the 2024 mentorship where I showcased that. And now you see it. But everybody else got to watch it too, so you can't make a mentorship sound smart. So defining a market condition that's very favorable versus not so favorable, that's the number one thing. And then what determines whether you're bullish or bearish? That's easy. What's your weekly chart? Is it looking to run higher up to an imbalance or lower to an imbalance after there's been some shift in market structure where it's just recently ran buy side on the weekly chart and there's a sell side imbalance below where price is, well, what's it likely to do? Reach down there. So your bias on a higher time frame is bearish. Don't fight that. No matter what you see on a 1 minute chart, don't fight that, because eventually it's going to bend the knee to that idea. Now, is that hard? No. But I could make videos where it complicates it and makes it sound very scientific, but it's very simplistic. And reverse it. If the weekly chart has just recently taken sell side and it's been moving up, and we had a down close week I'm not saying we did this, but I'm saying in hypothetical terms, if you're expected to see it go higher, and we had a down close week last week, but nothing's changed in terms of it's reaching up to a higher weekly imbalance or a short-term high, remember, because the market's only going to go to inefficiency or liquidity. If both are in existence, that's the strongest draw on liquidity. That's one of those gems I just tucked in there. See that? Your bias will be bullish in that condition. And then all your short-term intraday trades should be based on that. Filtering out any short selling. Don't do it. No matter how much it looks great or fast it runs for 20 handles, 30 handles, who cares? Let that go. In the beginning, as a new trader, don't take those trades. Only focus on where the market turns bullish intraday, with that weekly bias being bullish. So now what do we just do? We just made it very easy. You just beat 80% of the problems and complications in your trading by doing what I just told you there. Did I take a 15-minute video to say something that took me 2.5 minutes? No. I know how to teach, folks. I know how to do it, but I make it hard for people that are lazy, because I don't want to teach lazy people. And I don't care if that offends you. I don't care. I want people to appreciate what they get. And having it easy, having it your way mentorship, I'm not about that. I'm not the Burger King here, okay? So by having a condition that, knowing that this is going to be high resistance or low resistance, you're aiming for low resistance liquidity run conditions. Having a bias that's determined by the weekly chart, whether you're bullish or bearish, if you know those two conditions and you know them comfortably, that means you know without a shadow of doubt, nothing can convince you otherwise. Until you're proven wrong with a losing trade, you submit to that idea. 80% of your complications in your trading has been dealt with at that moment. What's left? 20%. What's inside that 20% ICT? What is it that's missing? Where's the missing link there? Time. And I gave you that this year. The macro. It's a very simple concept. 10 minutes before the top of the hour to 10 minutes after the top of the hour. Inside a very specific hours of the day, whether it be pre-market session, AM session, lunch, PM session, last hour of the trading day, Asia session, London session. Go back and listen to 2024 mentorship, and I give you all the macros that you're expected to know based on what I'm teaching. I taught them this year. You don't need to see it in a book now. And I showed executions using them with a real account, by the way. It's fun seeing these people say, oh, it's demo. You have no idea what you're talking about. You have no idea. Even when it's shown to you in the recording, you ignore it. You're so twisted up because you can't accept it. You took the persona that I promoted myself as, and you took it hook, line, and sinker, and you can't see anything else. That's the only way it can be, right? I have spoken to you for a long period of time, and I had elevated emotions because of either good or bad, and still I didn't go for my stone cold Steve Austin foul mouth, which is always part of the persona. I have to be a performer. See, I studied ninjutsu when I was younger, and one of the tenets of ninjutsu is that you had to be a magician, you had to be an actor, you had to have the ability to cloud your enemy's mind and influence your enemy, influence your adversary, invite them to make a mistake, and then don't interrupt them when they're getting ready to do it. That's exactly what a market maker does. That's exactly what the market does to you. That's what the Judas swing does. All these things are invitations like a snare. And some of you trolls literally love to put your head right in my noose and tighten it up for me and then jump off the block. I don't need to kick it out from underneath you. You do it to yourself. And it's very entertaining. It really is. It's like over and over and over again, expecting a different result. And it's the same thing. My enjoyment, my pleasure. You make yourself look stupid. And you keep denying the evidence that's being brought before you. And that to me is insanity. Like you can't accept it. Like I did a phenomenal job. A phenomenal job. But back to the last 20%, because I want to finish this stream because I have a couple things I want to do before it gets nightfall here. Timing. So let's play devil's advocate for a moment and say that you've done the work, that you anticipate that today is going to be a low resistance liquidity run condition. Okay? How do we know that we're going to have low resistance liquidity run conditions, ICT? Make it plain for me because I'm taking notes here, buddy, and you're putting down some really good stuff here. And I'm going to make sure I understand it correctly. If you're trading on a day that has no medium or high impact news driver, you are inviting the opportunity for high resistance because there's no manipulation that's likely to occur. It doesn't mean it's always like that, but most times that's when it's going to happen. Medium impact or high impact news drivers on your economic calendar are going to invite low resistance liquidity run conditions, meaning that there's going to be some measure of initial manipulation, some kind of Judas swing or some kind of a fake fast run that's the opposite of what you think is going to happen because you understand the weekly chart's likely to go higher or lower. Then you're coupling that with the market being in a low resistance liquidity run condition, meaning that you have economic data that's going to manipulate the less informed, unlearned individuals, the dumb money, the street money, basically. So the smart money will cannibalize those individuals because they're impulsive. They're going to look at the move that happens right after the market starts trading. And if it's going up, well, let's just go in here and buy it and see how many points I can get out of it and call it skill. Okay? There's literally there's no system to that. It's chasing price. And it sells for $200 a book or a course now. Okay? But the point is this. If you know that the economic calendar is likely to give you a medium or high impact news driver for that day, then you know that it's more likely, you have the odds in your favor that there's going to be opportunity for low resistance liquidity run conditions. That means the market can have imbalances that stay open, which is what you want to see. That's a hallmark. That's a signature of low resistance liquidity run. That means you're going to have faster price runs, less retracements. How do you know it's not going to retrace, ICT? Because if I'm looking at price and I'm seeing imbalances stay open or not fully close in, that's exactly what it looks like. If I'm seeing every fair value gap get closed in and it spends time in those fair value gaps more than just one time in and leaving it, or one down, spend maybe two candles in it and leave it and then come down, touch the upper half or touch just the top of it and spring away, that is still not what you want to see in low resistance. Low resistance is you want to see open imbalances. Even if it's a partial, even if it's a small portion of it, that is indicative of low resistance liquidity run. That means that you're going to have a fast market. If you know what you're looking for, how do we know what we're looking for? The weekly chart is giving you a bias. You know that the economic calendar is giving you the likelihood that it's going to give you low resistance liquidity run conditions. That means the market's going to want to trip up the individuals that don't know what they're doing, put them in the wrong side of the marketplace. You're looking for that. You're trying to trade in that direction. Initially, when everybody else is caught off guard and you're chasing price at the open, you're trying to buy that drop down. And it's scary in the beginning. It's really, really scary in the beginning, but it's okay. Once you get comfortable studying it and then practicing with it, tape reading, watching and saying, okay, hypothetically, I think it's going to stop here and it should not go any further than this level here. You're not taking the trade. You're not even demoing it. You're just paper trading it. I'm sorry, not paper trading. You're tape reading it. And you're studying it, watching what price does. And you don't have any leverage on it, so you don't know how much money you're making or losing, so you're not worried about the money. And you're watching price deliver on the basis of those macros. 10 minutes before the hour and 10 minutes at the top of the hour, there's going to be a run on price that goes right into an inefficiency or runs for liquidity. That's what they're designed to do. That's exactly what the macro does. It starts that spooling process. It does not complete it. It doesn't mean the only move is only in those 20 minutes. It does not mean that. And there's people out there literally trying to sell mentorships with parts of their mentorship saying those things, and they are patently false. They are not true. They have no idea what they're talking about. They're talking about things that are macro. They're not even macro. They're not. But because that buzzword is in the industry now, they're capitalizing on people that are foolishly impulsive and just say, "Her, you must be one of those guys that are charter members. You know the stuff that he's not teaching in those videos on YouTube. So if I pay you, you'll teach me those. You'll give me the study guides. There are no study guides, folks. These people that put that stuff out there, they're liars and they're frauds. Everything that you see that was supposedly study notes, all that was, when you watch the videos on my YouTube channel, those were the videos. The PDF files, the study notes, were just simply the pictures of the slides that as I changed from one slide to the next, I gave them as a PDF so that way they can scribble on it, put whatever notes they want on it. There was no other study notes. There was no PDFs outside of the slides that you're watching those videos. So anytime that the picture changes in those presentations for the core content lessons, and honestly, all of my charter members from whatever year you came in, come out in the comment section and say, that's the truth. There is no study notes that were apart from just simply the slides. That's all it was. You watched those slides in the video. So all I did was allow that video to be formulated in a PDF file. There was nothing additional added to it. But people lie to you and they make you think you're getting something extra when I didn't do any of those things. I didn't teach a 90-minute cycle. Okay. I mean, all this stuff these people, I did not teach Enigma. Now, truth be told, I have shown with commentary calling the market with Enigma. But I will never teach Enigma. I will never teach that. And anybody that claims to know it, they're a liar. You're welcome to come out here in a live stream and I will show you you know nothing. You'll never, ever, ever be able to do what I'm able to do. That will never happen. But I'm deviating from the thing here. Knowing when to trade, high resistance, low resistance. You want to trade in low resistance. Filter out high resistance conditions. If you can do that, number one, you're going to be better equipped to stay in the business long enough. You won't get chopped up. You won't have drawdown as much as you would if you trade in high resistance liquidity conditions. And 99% of influencers that trade live streaming, they always are getting forced entries in front of other people, and they're trading in high resistance liquidity run conditions. And my students that know this, they see it. And we comment about it all the time. In private, we're not in their comment section or chat room, part of their videos, live stream, trolling them. We're not doing that. But we can see that they don't know what they're doing. And the times that they don't do well is because they're trading in high resistance liquidity run conditions. And the few times that they do really, really well in their stream, it happens to be when it's in a low resistance liquidity run condition. And they don't know why their trades are doing well. They don't know why. They admit it in their own live stream presentations. I don't know what's going on. I know if I get out of here, if I turn the stream off, it's going to go do this, it's going to do that. No. If you're in a high resistance liquidity run condition, you're not going to think that way. You're going to be like, I want to turn this off, and I'll come back tomorrow and see what happens. So you can predict low resistance liquidity run condition days with the economic calendar. The bias is determined by the weekly chart. It's either going to go up for buy stops, or it's going to go up into an inefficiency that's above current market price, or it's going to go down and do either one of those. And where was the most recent rejection because stops were hit there? That's a very simplistic way of determining bias. And if you can't determine it at the time using those rules, that means you have no bias on the weekly chart. That means you're going to have to trade intraday volatility or do nothing. And as a new trader, my advice to you is do nothing. It's good medicine for you to be patient and sit still. In the beginning, every influencer, every educator, every teacher is going to tell you, go, 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 baby. And somebody that's got 32 years experience will tell you straight up, that's the poorest excuse of information advice and trading that you'd ever receive. Hurry up and fail is what that means. Hurry up and be a statistic. That's exactly what they're telling you. And that is the God's honest truth. I'm telling you, that is exactly what they're telling you. Whether they realize it or not, it is the truth. And when you're taking advice about trading every single day, that's somebody that's monetized by your viewership and your participation with an affiliate link below that video live stream, and you're taking advice from them, you're doing it wrong on all counts. And that means everybody. There's nobody that's spared in that comment I just made. You have to be very, very responsible with what you're doing and how you take information in and what source you're getting it from. If someone's making money off of the decisions that you're making, you have to question, what's their motive right now? How often are you losing listening to people that are monetizing your viewership or participation with an affiliate link? That's a pretty simple, straightforward litmus test, isn't it? But many of you aren't even doing that. So you have the understanding of when not to trade, a bias determined by the weekly chart, and then you time your trades based on the macro. 10 minutes before, 10 minutes after the hour. And it's going to start running towards an efficiency that you already arrived at based on your charts in the direction you think the weekly chart's going to gravitate towards on a day when it's going to be low resistance because the economic counter tells you it's going to be a medium impact or high impact news driver. The days that have a split delivery on the economic counter, meaning that there's usually a medium or high impact news driver early in the morning around 8:30, and then there's one usually at 9:45 or 10 o'clock. That one, you're going to either scalp and quickly take your profit on the first run at 8:30 or thereafter, and then move to the sidelines and then let the manipulation take place in the 9:45 to 10 o'clock later economic calendar event. Let that one do whatever it's going to do, and then wait for the imbalances or liquidity left that is still in agreement with what you expected on the weekly chart. Now, how about that? How about that for getting right to the point, ICT? How about that for finding something that I can build all kinds of trading models off of that? Because that's exactly what the framework is. That's the framework, okay? That's the golden ladder that's in every model. Every single model that I trade with, every PD array that's applied to that works like gangbusters. But you can't appreciate that as a new student or a first-time listener. It doesn't make any sense to you what that means. What does that mean, high resistance? What does that mean, low resistance? What do you mean a macro? 10 minutes before the top of the hour, 10 minutes after the hour. What am I supposed to do with that information? You have to see it repeatedly used, referred to. And students that have been around for a long time now just know, finally, this is a cut and easy recipe for building a model. Everything, whether you use a breaker, whether you use an inversion fair value gap, a standard fair value gap, a propulsion candle, institutional order flow entry drill, volume imbalance, Reaper, Gallo, all those things, if they appear in that structure I just outlined, you have a model that is defined by ICT concepts, smart money concepts, because Daddy's talked about it. How many moving parts are there? Not many. But that's what's lacking in your model. That's what's lacking in your trading. That's why you consistently keep losing. It's not because my concepts don't work. It's because you don't know how to use them. When should you? When shouldn't you? What's the bias? It's going to be derived by the weekly chart because smart money is working on that weekly higher time frame because they're moving billions of dollars. They're not trying to do, 10 penny trades here, 10 penny trades there. They're not small nickel diamond. They're not worried about getting an execution on that 1 minute fair value gap. But that 1 minute fair value gap yields an opportunity for you and I because we operate in low leverage. We don't have to force $20 billion in the course of this trading week coming up. But they might. And they have to spread that out over orders over the cost several days. So we have a whole lot of advantage as a small trader, somebody that's working with lower leverage, but we can make lots of money trading with that lower leverage. The opportunities that Goldman Sachs or investment banks like them, they don't have as many trading opportunities as we do. So they have to be very selective. Their quality and quantitative analysis has to be more stringent. It has to be very meticulous. They just can't go in there and willy-nilly every little fluctuation. And that's why they talk down about any intraday trading, because their models don't afford them the luxury of being able to do that. But because they say that, people that are brand new or they listen to these people wearing blue suede shoes and then block me when I comment on them. That was years ago, by the way, Anton. Thank you very much. The aspects of just simply blanket statement saying that intraday trading and con men only do that, nobody can time the market, nobody can do that consistently. Man, they just don't know. They don't know. And for them to say it's true, that means they have to go back and recount all the things they said about it in the past, standing on the soapbox of Goldman Sachs said so. I'm an alumni from Goldman Sachs. And to say anything outside the scope of what they teach in their theology about why markets go up and down, it would be contradictory to what they teach. So they're never going to admit that someone can do that because it flies in the face of the logic that they promote. And if they change that, what do they lose? They lose their identity as an alumni from Goldman Sachs. Like that somehow means something. It doesn't mean anything. Because there are traders that I've produced that out-trade them. I have seen other people using retail logic, but with impeccable money management. That's the key here, folks. But they've used retail logic, and they run circles around Goldman Sachs. It does not diminish their quantitative and qualitative analysis that they use at Goldman Sachs or the likes thereof. They do very, very meticulous, fundamental, and foundational studies for why equity markets will move a certain way. I'm not going to diminish that at all. I'm not saying that there isn't any kind of valid appreciation that shouldn't be owed to that. It is. I have a measure of respect for it. But to speak from that perspective and say that they're the trading authority and anything opposed to what they do and what they say is nonsense. That in itself is nonsense. Because you have seen me literally call it to the tick. Trade it with a real account. It's not always a demo account, baby. It's not always. And you've seen my own student do that with their own analysis. So yes, Virginia, there is something a whole lot more than just noise on these lower time frames. So if you strip your trading down like that, and you approach it with, I want this to be very simplistic for me. I want to know when not to trade and when I should be focusing on taking trades. What happens if you have things like you arrived at a bias on the weekly chart and you think it's going to go higher? You clearly see there's a fair value gap on the weekly chart that you could trade up into, and it affords you at least 150 handles before it gets to the low of the fair value gap above market price on the weekly chart. So that means you have a really decent range. What happens if the next trading day has a 8:30 medium impact news driver, and it's all it has? There's no other news after that. And you sit in front of the charts, and at 8 o'clock, everything's setting up. You can see clearly they've left overnight London relative equal highs. And if it opens up in a manner where there's a discount gap, the opening range gap will be a discount, and that gap will be like 50 handles or so. Now, there's no way to determine that for sure if you're looking at 8 o'clock because it's 90 minutes away when the opening bell happens. But it's already giving you a framework that it's there. How I trade the pre-market session is I think that right before the news comes out, I treat that as the opening bell. It's not. Clearly, it's not at 8:30. I mean, we're an hour away from that then. But what I'll do is I'll wait for that manipulation at 8:30. Usually, it'll drop down, take out some kind of short-term swing low, or trade into a very small inefficiency like a fair value gap, or trade into an inversion fair value gap, something that was expected to send prices lower earlier, but now it's become an inversion fair value gap. So it will trade down into that. And then that's the Judas swing at 8:30 delivery. And then I would look for a long, either with that drop down as a Judas at 8:30, or if you're not inclined to do that, then what you would do, where you would expect to see proof of low resistance liquidity run conditions, expect it to do that, but don't engage it yet. Then wait for it to trade up, create a short-term shift in market structure, bullish, like on a 1-minute chart, minimum, and then see it create a small little fair value gap that it trades down into. And then that would be your entry. You don't need it to be a trade that has the stop loss below the lowest low at the Judas. You don't need that. Because if you understand the fair value gap, you'll know that it's not required to go all the way back down there if it's a failed trade. If it breaks out of the fair value gap, that's enough. Because if it's valid, it'll respect the fair value gap plus a little bit below it, because we allow for that in terms of a mohawk. Just coloring outside the lines is normal. And then expect it to start running fast, and then either run the relative equal highs or run close to them. And then at opening bell, what will happen is they'll run those relative equal highs right on the Judas swing, or not the Judas swing, the opening range from 9:30 to 10 o'clock. And that first impulsive run, people will chase that, but you're already positioned, but you're exiting as it goes up into some other higher time frame PD array that's a premium, whether it be a fair value gap or relative equal high or a single high, where it's buy side resting. And then at 10 o'clock, the retracement that would come in for people that are chasing it, they'll be scared. And the only thing that's happening then is just it's pulling back down into a silver bullet long. Then you buy that and you ride that into 10:30 to 11 o'clock when you anticipate the lunch macro, where it'll retrace against that run, not all the time, but most of the time, and it'll come back down below a short-term low that usually forms after 10 o'clock. Now, does that sound ambiguous? Is that highly lofty, complicated speech? No, it's a very simple thing. It's very, very simple. But that's how you go and you apply it. Now, what happens if you get that drop down at 8:30? That drop down, right before it drops down, if it trades back above that, you can treat it as a bullish breaker. All conditions being equal. So already, we just talked about two different models using the same framework. The golden ladder, that framework, is simply understanding when should you, when you shouldn't. That's either high resistance or low resistance. The economic calendar tells you in a very binary way when it's likely to be high or low in liquidity. High liquidity is an absence of an economic calendar event, medium or high impact. That's the reason why I was teaching that in the private mentorship. The first thing I opened up with is knowing the economic calendar. Why? What's the importance of that? Because they're volatility injections. That's where the market will spool. It starts running, ripping away from some level, reaching into another. If there is no economic calendar event, can it create a low resistance liquidity run condition? Absolutely it can. But it's more likely that it won't. So you shouldn't be surprised that if you go into that day expecting it to occur, but then every fair value gap stays filled in, or if there's a fair value gap, it goes into it and it spends time inside of it, or all the previous candles, every time a candle closes, the new candle overlaps the majority of that previous candle, you're in high resistance liquidity run conditions. Turn the charts off and go do something else. And I mean that. If you follow that logic, folks, I mean this. I don't care how long you've been trading. If you use that right there as a basis for what you're doing day by day as a trader, if you're a day trader, that will make you more profitable than anything else I have. And I mean that wholeheartedly, God's honest truth, because that will filter out all of the unforeseen days where you go on tilt. I promise you, if you go back and look at all the times that you blew your account, or you went into major drawdown, or you just hurt yourself financially, you did it on a high resistance liquidity run day. Beyond a shadow of doubt, I guarantee you that's where it happened. And that was the epiphany for me when because I journaled everything like a nutcase. Like I was literally in there journaling everything. Back when paper and ink was cheap. I had a lot of that stuff. I had 3-ring binders full of things like that. And when I would go through and look at all of my bad times, the thing that jumped out at me was every day that I lost money the chart would look fuzzy. That's why I say it that way. Because back then I didn't have a language. I didn't have anything to describe it with PD arrays and this and high resistance and low resistance. That was the language I had to create to articulate the things that I had in my mind. But watching price on days that are very overlapping, it's the easiest way of saying it, where every individual candle shares majority of the previous candle's range. That's the clearest, easiest terminology I can use to define what high resistance liquidity run conditions look like. Now, it doesn't mean that it won't create fair value gaps on those days, because it can, most likely will. But what happens is as soon as it forms it, it completely fills it and then stays in it for a little while. It doesn't want to run away from it. So it's high resistance. It's not creating imbalances that afford you a very low risk entry. When it trades into it, then you expect it to just rip out of it, take off, and run in your direction. That's what you're expecting in low resistance liquidity run conditions. But if you start identifying a market that is either producing high resistance liquidity run conditions, or you even suspect that it is, don't put money into it. Tape read it. I promise you this. I guarantee you, folks, I promise you with everything that would be something that you would judge me on. I promise you, if you use this in your repertoire, in your trading, it will yield you better results because you're learning when not to do something. And that is the golden ticket in trading, because everybody has an excuse to get into a trade. Everybody has that. There's no short supply of reasons to get into a trade. Everybody's school of thought, everybody's way of trading, every methodology, every indicator, every tool, pattern, whatever it is, we all have reasons to get in. But how many clearly define when you shouldn't? Every single one of them, every school of thought, every educator, every mentor I've ever had, and wannabe mentor, has never, not one time, ever clearly defined a time when you should not ever stick your toe in that water. Because if you do, you will be devoured. Or you will go in there, make one simple mistake and lose a little bit of money. You'll lose your mind over that and try to get back that $50 that you lost plus commission. And then now you're down 500. Well, you can't have that. Let's go back in here and get that $500 plus the drawdown and commission costs and fees. Because if you're trading with a real account, you have real things called fees. NFA fees, commissions, in and out. Hello, that's the real world. And that $500 drawdown day becomes a $2,500 drawdown day, or worse. And you look back at the day when it's done, you're like, man, why was I in that day? Look what it's doing. Right. And some of you don't even know that yet. But you have no excuse now today. You have no excuse because you put the time and effort to sit with me today, and I took you to the woodshed. Go back and look at your losing days. Go back and look at them. 99% of them are going to be high resistance liquidity run days. And if you're a live streamer, you're going to ignore that because you have viewership watching you and you don't want to be boring. You don't want to say, I don't want to trade today because you're listening to Tom, Dick, and Harry in the chat room. They're at work. They have no idea what they're doing. They're watching you because they're clueless. And they're going to have an influence over you. You're the influencer, but you're letting these morons, these idiots, these do-nothings in the chat influence you and hold you to the fire that you should say, you know what? It ain't worth me doing anything today. And I, as someone that's been doing it for a very long time, I know what I'm doing. If someone starts a stream, like I have 5 people that I usually watch the first 20 minutes or so of their live stream. I like to hear what they expect because I'm looking for them to be opposite of what I'm looking for. And then as soon as they give me whatever that garbage is, I mute them. And then I immediately just start looking at their chat window. And I'm reading what their chat's saying. The more emotionally sided they are about one side of the marketplace or defensive about someone else being argumentative about, no, it's going to go here. If someone goes against the influencer that someone is streaming, there's always this not breaker in the pattern. They break against the direction or the underlying premise to what the influencer or live streamer is saying. I'm looking for that person to step forward. And when that person says the opposite is going to happen based on what that person live streaming is, now what that has done, and I've not seen one influencer not be influenced by their chat. They all are. They all are. But it's really critical in the first few minutes after the opening bell. I'm waiting for that sweet spot. Because what happens is, because the live streamers live streaming, the yahoos will say, oh, look at this guy. So-and-so saying it's going to go this direction. And now what that does is it makes the person that's live streaming very, very emotional. They get animated. They start dancing around because they're nervous. Now they're in an argument. They're in an arm wrestling match in front of their viewership. That's why their live stream replays don't have the chat window. But you have to watch it live. And you'll get the purest sentiment reading where smart money versus stupid money. And stupid money is influenced by stupid people. Think about how many people go online that listen to what other people are doing with their money and they want to just copy them like a sheep. They don't know what's going on that makes these people say that it's going to go up or down. But they're thinking, what if they're right? And I'm gonna be on the sidelines. I didn't follow them, but they made money. I'm gonna feel like an idiot. I better just do what they're doing. Because if they're right, I get to make money. And I can clap hand and clap with them and say, yeah, we're awesome. They want to be like us. They hate us because they ain't us. That's all that nonsense. It's funny. It literally is funny. But this is a repeating phenomenon that you can tap into because there's live streamers that are telling you this information and they don't even realize that they're a sentiment indicator. The purest, best indicator there is. But these same individuals won't recognize that they're in market conditions that they should not be trading in, but because they want to make ad revenue on their live stream, because they don't want to look stupid or weak in front of their viewership, they won't say, you know what, I don't see it today. I'm closing the stream down. Done. Let me tell you something. If live streamers start doing that, and they do it correctly based on what I just outlined, number one, there's somebody that cares about their own money and they care about the viewership. Because why sit there and waste time talking about something that ain't going to happen? You don't have a low resistance condition in the marketplace. That means that your probabilities are low that you're going to be profitable. It's going to be low that you're going to be precise about your entries and your exits. It means you're going to be high odds that you're going to get stopped out, high odds that you're going to have deeper retracements, high odds that you're going to have a terrible entry and not even be accurate about entry to profit. So you have everything going against you, and then you add to it that you're going to do this all in front of other people. What is that communicating? Well, for people that are just brand new, they don't notice it because they just want to be part of the circus. They just want to have part of all this carnival-like atmosphere that they're here. Yeah, let's talk about this guy. Let's talk about ICT. Play that song again. Do this, do that. Remember that time ICT said this? And what about that guy over here? He live streams. He just lost everything. Oh, what about this guy over here? They're all doing that chatter. And they don't even realize that people like me are using them as an indicator. And I'm taking trades based on their stupidity. And then I come back with a dose and say, check this out. And it's completely opposite to everything they're saying. Or I'm sitting still. I'm not taking a trade. When they're getting chewed up and they're crying. Oh, I wish I would have. You know, it's how it is sometimes, guys. You know, every day you can be a winner, blah, blah, blah. My superpower is knowing when not to do something. And it's something that you can learn how to do. And guess what that does? It frees up your responsibility as a live streamer. Go do something else. If your viewership is there to learn how to emulate a good, profitable trader, they'll recognize you avoiding bad days. Why would you not want to have that skill set? Show me, argue with me in the comments, argue with me why that's not a viable skill set that anybody wouldn't want to have. More so if you're an influencer in your live streaming. Wouldn't you feel more responsible as an educator, influencer, someone that's profiting off of people's watching, being able to showcase your ability to be responsible and show self-control over yourself and say, you know what? I can recognize today that my edge is not available to me. Now, to Tom, Dick, and Harry in the viewership, or on social media, they see that as weakness. Oh, you're not a good trader. You're not a good trader. Because later on in the day, someone's going to say, look what I did. And they're going to say, well, that guy or that gal made this much money and you closed your stream down. You suck. You're not a good trader. And these are the same people that are working jobs that don't know how to trade. And they're giving you a myopic perspective. And if I ever receive comments like that, I laugh that off because I know that was luck. That stuff exists. And you're seeing it happen on a day-by-day basis when people, in the opening bell, the first few minutes, they're chasing price. They're literally trading in the Judas swing. And many times they're flip-flopping. They don't even know what they're doing. They're just reacting to whatever price is doing. That means you have no idea what you're doing. And you stay in the stream even when the market's indicating that it's in high resistance. That tells me, and that's why I'm very critical of certain live streamers, because they aren't listening. And I don't care if you learn from this and never give me credit for it. I just want to see you get better. Everybody, I just want to see you all do better. But these are very generic traits to the marketplace. And because the markets are algorithmic now, it's very easy to determine when this is where it exists in price. And when it doesn't exist, when it's high resistance, it's hard to trade. When it's low resistance, it's easy. And it's also the same time, so when retail trading works really good. You want to know when bull flags work really good? Low resistance liquidity run conditions. Trade them in a high resistance, and you're going to get chopped up, rode over, and just over, it's done. Might as well just get the reset credit card app because you're going to have to pay for it. But you'll never hear a retail teacher using those things teach you that because they don't know what that means. They don't know what that means. They'll see everything as a bull flag and a bear flag or a pennant, a triangle, a polygram, whatever. It's just an excuse. This is why I'm doing something. I've been watching price long enough and I feel impulsive and this looks like some kind of geometric shape and I have to geometrically get involved. It's silly. It's literally silly. Instead of simply saying, okay, do I have an advantage today? Because if I don't have an advantage, why am I wasting my time and money? I'm not going to waste your time. Everything I teach you, everything I teach and talk about is meant for you to watch and learn so that way you don't have to waste your time and money doing it ever again. But there has to be an investment. You have to make an investment. And with me, it's time. And the folks that spend the time with me and they're really diligent about taking notes and learning and then going back and saying, let me see if what he said is really going on. All you have to do is take that mindset and apply it. And you'll keep coming back to me. And I don't have to incentivize you any more than simply just telling the truth of what the markets do and how they repeat. That's why you keep coming back here. Because if none of the things I taught worked only a few times and not an abundance of times, you would never come back. You see that consistency. You see that precision. But on high resistance liquidity run days, my precision evaporates. You ever watch the movie Ghost Rider? In the movie, Nicolas Cage, he plays the stuntman, right? And he makes the deal with the devil, okay? And he gives him the power to be the Ghost Rider. But he doesn't realize he's a slave to the devil. And he kind of rebels or whatnot. But in the movie, we learn that he loses his ability to be Ghost Rider when the sun comes up, okay? Well, I'm the ghost of the machine when it's in low resistance liquidity run conditions. But when it's in high resistance liquidity run conditions, my ability, my superpowers diminish greatly. Can I trade high resistance liquidity run conditions? Yes, but I will be plagued with more drawdown, more stop outs, and more likelihood of having a net loss day than it would be if I had a low resistance liquidity run day. Low resistance liquidity run days, I'm going home every day winner. And that's a guarantee. I will prove that any given chance I will do that every single time. High resistance liquidity run days, I'm just like the rest of you. The sun comes up, I can't be ghost. Does that make it plainer as an analogy? So why would you, if you're learning from me, I'm telling you what my kryptonite is. I'm telling you what my weakness is, okay? The markets are not going to deliver in a manner that is conducive for precision elements. It's not going to happen. So why would you sit there and arm wrestle and wait and wait? Well, it didn't do it on that macro. Let me see what it's going to do on the next macro. No, the macro is not going to help you. Uh-oh. Oh, the penny just dropped. Yeah, it's always towards the end, isn't it? People are going to catch on and be like, okay, his next video, his next stream, his next whatever. I'm just going to watch the last 30 minutes because that's where he's dropping all the good stuff. Now I got to mix it up and start doing it in the first quarter of the video or whatever. So you don't need a whole lot of moving parts, but you do need to have a simple framework that repeats in every model. And what I covered today is that golden ladder that will take you to a higher level of equity, higher level of proficiency, higher level of progress, and comfortable confidence. That's the difference. It's not arrogance. It's not arrogance. It just looks and sounds like arrogance to other people that don't know what they're doing. When they look at charts and they think, man, this is like a hieroglyphic chart. I have no idea what it's saying. It's another language I've never learned before. And that's a good analogy because that's what I looked at it as. And I said, well, I'm going to create a language. I'm going to create a language that I see these things and I don't have a way of going into books and say, it's this, it's that. There's people out there that still claim it today, that this is all rebranded stuff. It is not. All you have to do, baby, all you have to do is strip it down. What book, what author, what page number, what paragraph, what is it, and what's it been renamed? And you'll expose me. I'm the charlatan then. But $5 million on the line, real money. All you gotta do is prove it. Some of you people are broke, but you're in my comments all the time talking up nonsense. Become a multimillionaire at my expense. Make me look stupid. There's people out there doing mockumentaries, okay? Making up nonsense. Literally. This is the one you should have. That's the one you should do. Go into every school discipline that I supposedly rebranded and then ripped off and rebranded. Show me and the rest of the world where I took something and rebranded it and made it something else. Because I'm telling you right now, you're never going to be successful at that. It's never going to happen. But I would love to see you try. And I'm questioning why nobody's ever done it yet. Because they can't. They know they can't. But they know if they keep saying it in the presence of other people, and because most people are stupid and lazy, they're going to say, oh, well, there's 10 people that says ICT took this and took that and took this and took that. So it must be true because 10 people said so. So I don't want to go against 10 people and be bullied online. So let me just go along with them. And that's how social media works. So I use that stupidity aspect and I get the pot churning and I'll say something that's very polarizing. Or I'll say something that makes everybody have their higher expectation of me. And I don't do it. I'll pull your strings just enough because I know you all that are here to learn, you don't care what I do. Because you know that what I've taught you and you're making money with it, you don't care. Or you know me long enough that you know I'm having fun over here. But you know that there's people out there that literally hang on every syllable I speak. And they think, well, this guy said this, and this guy said that, and they love being able to come back and say something. Like I'm somehow hurt by that. I'm not. You're doing exactly what I want you to do. And the 10 people that's going to watch you post that, they're going to try to assume that same perspective. And then they're going to watch me do it, explain it beforehand, and they're going to be like, what in the world? I'm probably wrong. And that internal wrestling match forces them to go into my content deeper. And then they're converted. That's what I do every single year. That is a wash, rinse, repeat with me. I do it every single year, and every single year my viewership grows. And every single year more testimonies come forward that this is the truth. This is how the markets really work. And I don't necessarily agree with everything you say because it's hard to read that out in the first few times listening to you. But I separated the man from the method, and that's the graduation point. I'm acting as a Judas in the beginning. I need you to remember what brought you here. You're not here to be friends with me. I'm never going to have dinner with you. You're never coming over to my house for the holidays. If you do, we're going to have static. But I'm here to teach you what you should know and how to operate. And some of you get caught up in the fanfare like I'm a celebrity, and you blur the line that I've made very clear that I'm just a conduit. And I'm going to challenge you. I'm going to make you uncomfortable. I'm going to force you to question why you're here. If you're here because of me, you're here for the wrong reasons. I made that mistake with Larry Williams. I lifted him up on a pedestal until I tried to do everything that he taught in his books. I paid for his signals, and I failed with it. I failed with it. His stuff didn't work because it didn't work. It failed in my hands because I didn't do it right, and I didn't have the well, the skill, really. I mean, it's really what it is. I didn't have the skill. I was already hurt. I was in drawdown. I was trading with money I couldn't afford. I was over leveraging, and I couldn't even hold the position with the stop losses that he had. I was getting stopped out, and because I couldn't have the full stop loss that he had on the trade, I was like, well, I can't hold that trade in the S&P that long. And he's using a $2,500 stop. I mean, I can't do that. So I'm going to trade with 2.5 handles. Okay, well, that's not $2,500, but it was enough for it to go down and stop me out. His stop ain't stopped out, but I'm saying his stuff didn't work. I've had that arc in my development too, where I turned against my mentor. I had this villain perspective of my mentor when it was me failing in my own hands. And I'm cognizant that it's going to happen in my own community. There's going to be people that's going to come up. They're going to love me in the beginning. They're going to use my name to garner attention. And when they get enough attention and they have their own community, then they're going to become the villain, the rival. Okay, you ever watch the show The Master, Lee Van Cleef in the 80s? Shokasugi was the antagonistic rival student of the master. Master was Lee Van Cleef. He was the American that was supposed to be the first American to learn ninjutsu, and then he wanted to leave and go searching for his long lost daughter. And because he was leaving Japan and leaving his clan, Shokasugi was Okasa. He was the guy that was going out and saying, no, you can't leave the clan. You're supposed to stay with us. You're not supposed to do that. So he constantly chased him throughout the TV series to try to kill him. Well, I have that. I have a whole bunch of Akasas, okay? They all learn from me, okay? I'm the master, Lee Van Cleef, okay? I'm not saying I'm the master because I don't think anybody should call themselves master of anyone, and nobody should call me master. There's one master, his name's Jesus Christ, and everything else, we're all human. We all put our pants on the same way, and we all go to bed and get up the same way, and we're all just weak. But I have students that have literally couldn't wait to get a better understanding about what they do as a trader and learn my language, okay, just enough so they could talk about it in market replay and then talk smack about me in their private community, but would not be able to do anything outside of that community when I'm standing right in front of them. And that's weak. That's really, really weak. And I was aware that stuff went on America Online when I was teaching back then too. I had that. It's going to happen. People are dying for attention. They're dying for it, okay? And this social media climate that we've created, this environment, okay, is ripe for mentally ill people that seek validation and just want to be worshipped and looked up to. I have friends, I have family members that love me. I don't personally care if you care about me or love me. I don't care. I'm not going to lose sleep over that. I appreciate for the ones that make that known that they care about my well-being. They pray for me and my family. I love that. But I'm not on social media to be worshipped or loved. If you really pay attention, my attention is for the people that don't like me. I like doing that. I get off on that. I mean, I really use that's what I use X for that. What am I really teaching on X? Nothing. Once in a while, I'll share something for the people that are there, just because I'm going to toss them a bone. But most of my teaching is always on what? YouTube. I'm here to troll. That's all I'm here for. That's all I'm here for. It's my entertainment. But some of you get lost in the sauce and you don't realize what I'm doing. But that's the reality. I do it every single year for my own entertainment. And don't take X, don't take Twitter and the antics I do here and think you know me, because you don't. And don't think you understand my concepts or Enigma or anything because you spent a little bit of time with me, because you don't. Having that golden ladder framework on your trades, that is a constant. Those things are in every single winning trading model. Every single one of them. They all have those central tenets. If you don't have those in place, you don't have a high probability, low risk setup with any model. Ever. Ever. So my question to you is, have you spent enough time building an understanding that gives you the clarity before you sit down and take a trade? Are those factors visible in price action where you can't see anything but that? You're going to be one-sided in your opinion. You cannot imagine the market doing anything opposed from that. That means you're in high probability conditions. Then you're simply going to wait for time. What time? Well, if you're a London trader, you can trade the London session, and you're going to be creating a high or low of the overnight that will many times be attacked in the New York session, either on the basis of a continuation move where it runs to that overnight high or low and just keeps on going, or that is used for the Judah swing. It'll run that and then go the other direction. How do you know which one you're going to do, ICT? What agrees with the weekly chart draw on liquidity? You see how that weekly chart it's like Jupiter in our solar system. That big old planet, God was so perfectly engineering a big guardian. A lot of the asteroids that come out of our asteroid belt that circles our solar system, once in a while they bang into each other, or we have something outside of our solar system like a comet or an asteroid that's moving around. It may hit that, like pool balls on a pool table, they start moving all around. Well, Jupiter's so big, it has such a gravitational pull. A lot of the things that would be dangerous to us as a planet being struck by these things, Jupiter does a beautiful job of pulling it into its orbit and absorbing it. Okay? Well, that same thing happens in trading. The same thing happens with price. And understanding what that weekly draw on liquidity is like Jupiter in our solar system. Its gravitational pull is going to overtake the small little comets and shooting stars that are moving around on the 1 minute chart. These little fluctuations that you get caught up as a retail trader. Oh, look at this. It's a bull flag because it's on a 1 minute chart. That bull flag on a 1 minute chart, when the weekly chart's saying it's going down 250 handles, that's a false bull flag. And I'm selling them. I'm buying bear flags when the draw on liquidity is higher. How about that? How about that? So I'm not opposed to bull flags and bear flags. They exist, absolutely. But I know when they are going to fail, and I know when they're going to work. And in low resistance liquidity run conditions, if you like bull flags and bear flags, they're going to work for you. But if you're in high resistance, you're going to watch you lose money in front of other people. If you're honest and you show your account. If you're honest, because 90% of these folks out there aren't going to show you when they're going to get in, or you talk about the price they're going to get in. They'll say, I think it's going to go up here, I think it's going to go down there. Okay, that's wonderful. That's good enough to watch and observe. That's great. It seems a little disingenuous when you come back, oh, I'm going to get ready to take profit, but you didn't say when you got in. You didn't say what price you were getting in at. Like, why even bring that part up? Don't even do that. Calling it right in the direction while you're live streaming, yeah, that's actually better than most people do in live streaming. But what complicates it is when you as a live streamer, or people that, if you watch them, you're witnessing their weaknesses never being compensated for. No, that was the wrong word. You're watching their weaknesses never be corrected. They keep holding on to their weakness. And what does that mean? Lots of live streamers will say, I think it's going to go up to so-and-so price. They may use the depth of market, the ladders, the DOMs, if you want to call it that. It's not dome, by the way. There's a lot of orders up here or a lot of orders down here. Or they'll say, the book map says there's a lot of orders here, a lot of orders there. That doesn't mean anything. That doesn't mean anything. Book map, anything like book map, anything like depth of market, any of those tools, if you want to call it that, are useless unless you know what that weekly chart's going to draw to. And you don't need anything except for an old high or an imbalance, or an old low or an imbalance that's above or below price. And what did we just recently leave? A raid on stops above or a raid with stops below? After that occurs, look for the inefficiency on the opposite side of market price or the opposing liquidity, because that's what it's going to draw to on the weekly chart. That is easy, folks. That is ABC 1, 2, 3 of bias. What's difficult for you is you watch me or you watch other people trading, maybe even using different stuff, and they show this is what I made today, and it's completely against what you would expect to stick to as a weekly bias. So what does that do? It influences you, entices you to think that I don't want to use that weekly chart. I don't only want to simply trade in that direction. I want to be able to do what that person did because you have a shiny object syndrome. Everybody's trying to show you what they did right. And because you're like a dog in a meat market, you're going to chase every sausage that's hanging over the edge of the table, every little scrap that falls to the ground. You're gonna go right where that dropped and stay there, hoping another piece of scrap meat falls to the table into your mouth. Instead of simply saying, I'm not going to worry about what other people think. I'm going to worry about what I think is going to happen using these tools. And if I don't get any traction with it, if I don't see any validation in using it continuously going forward, then I have done the work and I don't have to worry about ICT or anything he does ever again. And that's all I ask of anyone. That's it. It's a very simple process. But live streamers, they will showcase their weaknesses because they don't know what they're doing. They don't know where the market's going to go. They don't know how to enter because their entry strategy is chasing price. They call it momentum trading, but it's literally hope and pray trading. It's after the market starts moving a lot. Well, it should keep moving. If it gives me 10 handles or 15 handles or 20 handles in just static price action running into the same direction, I'll call that skill. I call that gambling. And there's nothing wrong with if you have a really good risk model of saying, okay, I'm going to go out on a limb and say that in my live stream or publicly, I don't know what I'm doing as a trader, so therefore I'm going to be honest and say I'm just trying to get whatever I can in momentum breakouts. Okay, say that. Then everybody watching will understand that you're impulsively reacting, and that means you don't have an entry strategy that's going to be repeating. You won't have an entry point that is always repeating. You don't have a mechanism that says, this is where I buy when I'm bullish. This is where I short when I'm bearish. And how do I know that? Because all you have to do is read their chat. They all have the same arguments. You never say when you're getting in. And that is the biggest testimony that you have no entry model. You have a wonderful experiment, a laboratory experiment by watching live streamers. You have a perfect sentiment indicator if they have their chat window open. Not all of them do. You have a wonderful psychology experiment by watching them engage their chat and lose their mind and then become emotionally attached to an idea because somebody rose up as a breaker in the community saying, I challenge your initial expectation on the marketplace. Sometimes the live streamer is right. Sometimes that breaker guy or gal that stands up in there and says, no, I don't think it's going to go there. They're right. The argument that I'm looking for, this is why I use these live streamers. I'm telling you exactly how I do it. Like in the past I've mentioned it, but I'm literally telling you the science behind it all here today. Because I want you to go out there this week and use it the same way, and you're going to be astonished. Now, many of them are listening to me. In fact, probably all of them, let's be honest. They know me, they know that I watch their stuff. But I'm not watching them to learn how to trade. I'm not learning how to follow them. I would never trade like any of them. In fact, I never would trade like any of them. I'm looking for opportunities to go against their chat predominantly. But in the rare instances that the chat window doesn't have a polarizing argument about where they think the market's going to go, because really what I'm looking for is if I'm bullish, I want their chat to be really bearish. Because that means I'm diametrically opposed to stupid people. So if I have someone in that community rise up and say no to the live streamer that says they're bullish or bearish. Whatever their initial expectation on price is, I'm looking for one person in their chat to rise up and say, I disagree with that, and here's why. I think it's going to go to this price level, opposing the person streaming. So now what do we have? We have a chesting up between two personalities. One has a vested interest in being right. The other one can be wrong and it doesn't hurt them because they're among the peasants, right? Who cares? They just get lost in the whole frothing of everybody talking about their nonsensical perspective. But the person hosting the stream, if they're weak and they don't have a model and they're simply out of control, they have no discipline, no self-control, absolutely none, and they have a weak psyche, I'm looking for that moment when that person, that breaker that stands up amongst all of them and challenges the live streamer. And if the live streamer takes that bait and shows their hand, you can literally hear and see their whole demeanor changes. Their body language communicates crazy town. It's literally, they may be slack in their chair, right? They're sitting in their chair, they're real relaxed, and somebody rises up and says, I oppose you. Immediately, their countenance changes, their shoulders rise up, they're sitting up high in their chair, they either start dancing around, moving around, if they have props around them, they're moving their props around, okay? Why? They're nervous. Because now there's an argument that their community has posed, and now they have been challenged right on the spot, on a live stream where people are watching. So now it's not just simply, I think it could go here, and if it doesn't, who cares? It was something we were just watching. But now, because we have a real arm wrestling match from one opinion to another, and the other person that made that initial challenge doesn't have to be right. He or she does not have to be accurate with their expectations, but the live streamer is held to a larger degree of accountability. They're the professional. They're the number one trader. They have what? They have all the expectation placed on them. And if they fall into that trap and that snare, and they say, all right, bet, and they do everything to force that contrarian opinion, they're losing money. It ain't going to go their direction. If they do make money, after they lose a trade, they flip and they go the direction. And they're chasing price. There was no entry mechanism there except for, I'm wrong, let me just flip and try to get the money back. And over leverage it to the hilt. That's the kind of stuff I'm looking for when I'm watching live streamers. I am not trying to copy their trades. I'm looking to fade them all the time, 100% all the time. Every single instance, I'm looking to fade them. Because largely, most of them have a model that repeats with consistency. They're just trading intraday volatility. And that can be hit or miss. But professional gamblers, if they manage their money right, they don't over leverage on every single trade, well, guess what? They can weather a lot of losing trades and still come out ahead. But the more braggadocious, the more attention-seeking, the more controversial or drama-inducing characters online, they make it easy for sentiment. They make it themselves very easy, or they bring in people into the live stream that you can read like tea leaves, like literally, like you can read the perception of stupid opinions. They're just highly emotionally charged individuals that they want this thing to happen. And it usually starts with whoever's the most talkative in the chat. Like I have a list of certain screen names that I know haunt certain live streamers. And I'm looking for them to start chattering initially. Because usually they're the ones that lead the charge about the stupidity. It's going to go here, it's going to go there. I think it's going to do this, it's going to do that. Okay, I'm looking for those jokers to say something that is diametrically opposed. That means opposite. If I'm bullish, I'm waiting for them to step out there and say they're bearish. Done. I know exactly what I'm doing today. And I don't care what the live streamer he or herself are doing. It doesn't matter. It does not matter. I'm focusing on the chat because chat is street money. They care about being right in the presence of other people. That means that they have no expectation of following a sound model. They just want to gamble on the notion of being correct in the presence of other people so that they can get their reward. Because they're not trading with real money. They want to hear somebody else say in the chat window, bro, you called it. Bro, you were smart. Bro, you did it right. Oh, man. That's what they're looking for because they're not trading with real money. So they're doing the only thing they can with the economy they have to work with, which is being broke, and they're not actually trading with real money. They're throwing their opinion out there in the ether, and if they're challenging enough to challenge the live streamer, that is a supercharged sentiment. Now I have two people wrestling with one another. I know that if this argument takes place, that I'm going to watch the mannerisms of the streamer, and whatever they're going to do, I'm going to fade that, because they're going to force themselves to do the opposite of this person that's acting as a breaker in the community, in the chat window. So I have the perfect Frankenstein experiment where this person's going to go completely ballistic because they had a person in their community had the audacity to challenge them and say they're wrong. They completely lose the plot. They have no idea what they're going to do now, except for, I got to do the opposite of whatever this person says. So if they had a plan, they don't have it now, and they're going to just do something impulsive. And when the market gives that initial Judas swing, whatever the direction that is, if it's setting up the opposite direction of where I want to trade, if I'm bullish, I want to see it drop. Many times, if the instance of this person in the chat will rise up and say, I believe it's going to go up, when the streamer says it's going to go down, what's the streamer going to do? They're not going to side with the person in the chat, because that means they're a follower of a person in the chat. If it's a man that's streaming, they're really going to stand their ground and say, oh, and they're going to ridicule that person in the chat, and they're going to do the opposite, and they're going to try to make money going short. I'm going to go long in that short, in that Judas swing. Their live streamer is going to lose and have to either concede and say, I'm done, get stopped out, or if they're smart, use some kind of low risk entry model to go long. But then generally that usually doesn't happen. They usually just watch the market go and they complain about, oh, see, man, I wish. I don't ever talk about the market. I wish. I don't talk in terms of regret. I'm not surprised. Okay, these are all characteristics of people that don't know what they're doing, and they're reacting to price. If you don't have an expectation of what you expect to see in price, then you don't have a model. If you don't have a model, you're gambling. That means that you have no statistical probability to measure in continually seeing the same outcome in your favor repeating. You have no expectation that you can measure scientifically with data that suggests that what you're doing today should repeat tomorrow. You don't have that. You're just impulsively chasing whatever's going on. And if you entice other people to share their opinion and you're influenced by that, you are creating the perfect sentiment indicator. And for people like myself, we use people like you because you are doing the very thing we're hoping for. We want somebody that's reckless. We want somebody that's impulsive. We want somebody that has no rhyme or reason why they're getting in. They're just chasing price. And if you're chasing price when it's going against the underlying direction of what we expect to see happen in price, we know that we're looking at a Judas swing. And you're getting caught up in it, in a snare. And you're getting stopped out or getting crushed. And if you have the decency or honesty and show that you've lost on that account, many times I don't believe that's occurring, but it doesn't matter. I don't even need to see their results. I just know when they subscribe to an opinion, and if it's an arm wrestling match between a person that's in their chat, that is a wonderful experiment for you to see how people get emotional about trading. They get very dogmatic about the outcome of a trade because somebody said this, so therefore, no, I'm going to challenge that view. Well, is that challenging view sound in the technicals? Is what you're suggesting as an argument to somebody saying you're wrong initially? Because admittedly, some people, they're waiting for something to happen later on in the morning. Okay, I'm not suggesting at any measure that their initial expectations is what they're going to stick with all the time. Because sometimes I'll have something, I would rather see this, but if the market shows me something else, then I know, well, what I was hoping to see, that did not give me the opportunity I would want to see normally. So then I would change my model and say, okay, I have an opportunity to take 20 handles, 30 handles out of this. And then once it goes there, then it should probably give me what I'm looking for. So it's a matter of what we're getting at the opening bell in those first 30 minutes. Admittedly, I will concede that much. But generally, live streamers are very emotional, except Mr. Matt Miller. This guy looks so unfazed. He's sitting out there like, yeah, well, it is what it is. I'm just watching price. And I never see him get emotional. Like, I never see him get emotional. I never see him get emotional when he makes money. I never see him get emotional when he loses money. I never see it. And that's a wonderful characteristic. So I don't use Matt in that regard, but there are a few people in his chat that I focus on. And when they're opinionated and it's opposed to me, I like that. Apart from his live stream, there's nothing that I look for there. I don't see anything to say anything more about it that would be used in a way that would be viewed as nefarious. Like, I'm not trying to be a villain, because I like Matt. I think, what he does is good. He doesn't talk any negative to other traders, other live streamers, nothing like that. And he runs a very, very tight community. But it's still, once in a while, there's a few people, there's like 4 or 5 guys in there that will just be rabble rousers. And he doesn't really give them any attention. And not that they're trolling him, but they'll either say stuff about other YouTubers, lesser known streamers, or myself. And as soon as they start saying that, that means that they have something to prove today. And then they're going to give you the opinion of what they think the market's going to do. And I love when they do that, and I'm opposing it. I have 1 or 2 things that I'm looking for across these live streams that other people are doing. And if I have a sampling of at least 3 live streams and their community saying something in opposed to what I'm expecting, I have the perfect sentiment indicator that I know I'm on side. That means I'm right, they're wrong. And that's how I use it. But the only time I use the influencer or the live streamer themselves is when someone rises up and challenges them. And I can only get that information by watching the first few minutes. So yes, audibly, I'm listening to 4 or 5 people talking all at one time. 2 of them are kind of quiet. They don't say too much, but the other ones are like constantly talking. So I'm allowing my ear to pick up on key things, key expressions. And one of them is absolutely nutcase. And when they go off the rails, it's easy to notice when they're emotionally and psychologically committed to one side of the marketplace. And then I go back and I scroll through the chat and see who made that person that's streaming, go crazy. So when I have that, I have the perfect sentiment indicator. And then I'm listening for them to say, if you're trying to go short right here, if you're trying to go long right here, you're just doing it wrong. You're just doing it wrong. Blah, blah, blah. And I'm like, that's exactly what I'm looking for. Because that's exactly what I'm doing at that moment. As soon as they say, you're stupid if you do this, if you're trying to look for shorts right now, I would never look for shorts right now. I'm going in, I'm looking for a fair value gap or a stop on buy stops, and I'm shorting it. I mean, that's what I'm doing because I have the perfect opposing weak street money view opposing what I'm expecting to see in price delivery. And it's uncanny. Uncanny. The hit rate, the strike rate is phenomenal. Only based on sentiment. And I use that in the opening 30 minutes. After 30 minutes, I don't care what they're doing on their live stream. I don't care if they made money or lost. I don't care. But I'm using that intel for the first few minutes because I want to see what people with less understanding that are prone to gambling, what they're thinking, and then what is their community who follow them religiously, what are they either in support of, or if one stands up and says, no, I don't agree with that. And then it causes that live streamer to go off the rails. And then now they're emotionally and psychologically committed to being opposed to them, not following price action. They're just simply arguing now. So that's a perfect sentiment indicator. You're trading on nothing except for your emotional response to someone saying, I don't agree with you. And it's just a wonderful, wonderful observation for you to do. It only takes about 20 minutes of your morning session. Really, if you look around, it isn't hard to find the most loudmouth ones. And if you focus on them and their community, they'll give you the perfect sentiment indicator. It's so fascinating. It's unbelievably, it's sustainable. It's for at least a year and a half now, I've noticed that it's very consistent. And if you have something that you know is high probability by your own definition in trading, and it's opposing that, that's like a lead pipe cinch trade. It's easy. And you're using the influence of someone that doesn't know what they're doing, but's trying to communicate to people watching them that they do. And it's remarkable. It's wonderful. And I don't have to be a mean-spirited person to say who they are. And no one's victimized by it. But that's what I do. I take advantage of their myopic perspective. And they're introducing emotion, they're introducing pomp and clout, and all that stuff just brings with it the likelihood that they're wrong in their expectation and price. It's simple. They might get lucky when they chase price and they get their 10 handles or 15 handles, 20 handles, but they're participating in the actual Judas swing. So if I know that I'm looking for that run up and they're part of that run up and they're real talkative and they have a range objective that's going to go way beyond where I think the Judas is going to end, then I know I'm good. I'm going to be selling short in that where it goes in my premium array. Or if it drops down into my discount array, I'm going to buy in that low. If you look at my examples when I'm showing my executions, I'm buying that low candle or I'm selling that high candle. And it's because at that very moment, it's doing what I expect it to do algorithmically. And chances are, with a great deal of probability and consistency, somebody on the internet is talking it up on the opposite side and they don't have any understanding what the price is doing. And that's a day in the life of ICT. That's what I'm doing. That's exactly what I do every single morning. So when I was live streaming, I wasn't able to do that because you would hear whoever I was listening to. I didn't want to embarrass anybody. I didn't want to cause any kind of needless drama because it doesn't really matter who I listen to. It's who is listening to them, and I'm reading them. In the rare instances that two of them get all animated about someone challenging their view, because there's only two of them that I've used that perspective on, because the other ones are they're not all that animated. If you watch them, they'll be kind of boring, actually. This is exactly how it should be, because you're trading. You're not in there trying to have like a Cirque du Soleil event, right? But anyway, I went on a little bit more than I wanted to. I didn't have to charge anything extra, so I gave you a rundown on what I expect to do this coming year. I talked about filtering out trading opportunities on days that are going to promote low resistance, how to very simply determine when that is and when that isn't. The framework I outlined in here is like this golden ladder framework, where if you use those three primary principles, if they're very clear in what you're trying to trade, and you apply any PD array, and I'll argue and say this, forget my PD arrays. Okay, if you use the logic I outlined in this discussion today, traditional retail stuff like moving average, stacking, like if you're bullish, and say you have a 9 period and an 18 period moving average, okay, exponential, and you're bullish, and that moving average is, both of them are starting to slope higher on a day that you're bullish after a manipulation rather, and we have a target that's unfulfilled. That means some kind of a fair value gap above price or short-term high that hasn't been traded to for the buy side. That movement towards that target, you'll see the moving averages on 9 period and 18 period moving average on a 1 minute chart. The very first fair value gap that trades down into, if you start using that, if you want to use moving averages as a crutch, it'll help you have a little bit of a trust aspect. But all the other things I said here, they have to be true. Because if that's not there, the moving averages aren't going to help you. It's just simply, it ain't going to help you. What will happen is it'll turn, and then it'll keep dropping, and eventually the moving averages have a crossover. And you'll be like, oh, but the moving averages wouldn't help to me. But having this logic of using the weekly chart, the calendar correctly, and then time of day trading, you can look at classic bull flags. They'll work for you then. Look at pennants. They'll work for you that way. All the continuation patterns that you see in John Murphy's book, if you use this golden ladder framework that I've outlined here, that's what unlocks your retail trades and why they work and when they work. But if it doesn't have that, all that stuff that you're trying to apply and look for in price patterns and stuff, it's nonsense. You're getting fooled by randomness. The market has to move on a higher time frame basis. Why? Because there's institutional sponsorship behind those weekly moves. Those weekly ranges aren't by mistake. They didn't just happen. A lot of volume was pushed through to create that candle. And it's not your volume. It's deep, deep, deep pockets that have to spread their buying and selling over days, not just single, like 1 minute candlestick dropping down. But you can participate in these larger moves by facilitating your entries and exits by these entries and exit strategies that I'm teaching with my PD arrays, where it allows you and affords you very small risk because you can define where you're trying to get at and how far it should move away from that and still be good. And if you trade with that as your mechanism by having known when there's going to be high resistance, not trade in that, low resistance, trying to trade in that, trading with an economic calendar day that has a medium or high impact news driver on it, and if it has no economic data, expect it to be high resistance, but be pleasantly surprised if it starts producing low resistance. And the way we identify low resistance is inefficiencies stay open. They don't fully close. And any fair value gap, it gets traded to one or two candles. It doesn't dilly-dally and spend a lot of time inside them. It leaves. Previous candle bodies are not overlapped with the subsequent candles. That's easy stuff, folks. It's visually identified. Now, as a first-time viewer and listener, you have no idea what I'm talking about because you don't have any framework on that. But that's the reason why I teach the way I teach. Repetitive, seeing it over and over and over again until it's boring. When it's boring, you know it. If you hear me saying certain things that you've learned for years, I talked about, Larry Williams couldn't figure out how to buy below the opening price, and he would only buy strength. So if he was bullish, he would take 20% of the previous day's range, add it to the opening price, and that's where he bought. And then he used the $2,500 stop. That's his methodology back then in the 90s. That was his model then. I don't know what his model is today. I don't follow him. But that's how he traded then. And that was too much money for me. Like I couldn't take that type of trade with a $2,500 stop. But knowing what weaknesses are, it's important. And until you go through the process of figuring out what they are for you, you won't know what they are and you won't be able to overcome them. But you have to start with some kind of foundation, and the foundation is knowing that trading in high resistance liquidity run conditions is problematic for me too. And there's no shame in me admitting that. What that does is it proves that there are algorithmic signatures in price. There are times when you can completely identify with no ambiguity, with no uncertainty. This is a market that I don't want to be trading in right now. Why? Because every candlestick, every new candle range or bar overlaps 60 to 70% of the previous candle range. If you see a lot of that stuff and any inefficiency gets filled in and it stays in there, you're in a market that's in no hurry to go anywhere. So why would you expect explosive price delivery in that day? Can it happen? Sure it can. But when are you going to time it? Because I can't do it consistently. Think about that. I'm Inner Circle Trader. I'm the man. And I'm telling you that I cannot get the traction I can get. I look like a freaking wizard in low resistance liquidity run conditions. No one's going to trade better than me in those days. Never. It ain't going to ever happen. I will buy and sell all day long. Up, down, up, down, up, down, and rack them up. But I can't do that in a high resistance liquidity run day. That is not weakness that should be, looked at and made fun of and mocked. It's me saying that I lose my edge in that day profile. So admitting that is a weakness in my trading, it's a strength by me identifying it and not falling victim to it. It's no longer a snare. When I was 20, I blew accounts in that over and over and over again and didn't realize it was happening. Think about that. That's a game changer. And it's somebody telling you what they were doing wrong, and it took years to identify what they kept doing over and over again. Me. I was doing it wrong because I couldn't identify that. Because none of the books I bought, none of the courses, none of the authors, none of these people, Andrew's Pitchfork guy didn't talk about this crap. It didn't happen. Nobody talked about it. Larry Williams didn't talk about it. I would love very much to be able to say, my mentor, XYZ, taught me this. But they didn't. And it's a truism in the marketplace that once you see it and you really understand it, it exists. And it will define whether or not you should trade or not. And that's the biggest advantage every trader needs in the beginning, because we all want to trade every single time we have the opportunity to. I got money in my pocket. I got girl money. Where's the bar? I hope there's some honeys there. That's the mentality. That's how it is. But you need to know definitively, without no uncertainty at all, why you are not, absolutely not participating. And you don't care what ICT is doing. You don't care what his best students are doing. You don't care what Tom, Dick, and Harry's YouTube streamers are going to do. You don't care where they're streaming from, what they drive today, how much money they lost doing that. You don't care. You know that this is a rule that you have to live by as a trader. I am not trading in high resistance liquidity run conditions. If you start that way as a new student, you give yourself such an advantage. Because it will, number one, create discipline, which is absolutely necessary. Self-control, which most people don't have. They don't have it in the real world, and they certainly don't have it in their trading. And you need that, or you will lose everything and more. And that scar tissue will make it difficult, even if you have the money to put back into a new account. You're going to be real scared to take the next trades. I'm scared to lose money because I just blew 17 different accounts trying to get these top step accounts passed. All that stuff's avoidable. All of it is avoidable. And they're lessons that you don't have to spend a whole lot of time studying to see it and recognize it. But if you see it, don't try to say, well, I'm going to ignore it because I want to be trading today. I won't have another opportunity this week because my work schedule, my university schedule, my sleep schedule, my personal life won't let me do it any other day this week. So I have to trade today, ICT. You don't get it, bro. No, I get it, but you're about to get it. You're about to get it, bro. You're going to get regret